Okay guys, things are just getting messier. The economic war has not ended yet. Definitely not. As the G7 stole Russia's reserves, Putin is now taking his own steps to isolate Western assets. Western banks have continued to operate in Russia for many years, including after the war. This may surprise you, but they are making a lot of money in the country. Last year, Western banks locked in Russia paid over €1 billion in taxes to the Kremlin. So in a sense, Russia is profiting off G7 assets. Because of the sanctions, Moscow is unable to access the SWIFT system, resulting in a lack of access to payments in dollars and euros. In today's video, we're diving into breaking news that you need to know. I've done all the heavy research to make sure this is quick, efficient, and packed with value. So fasten your seatbelt, because what's coming up is going to be a wild ride. This is Earth Economy Explained. Let's get started. EU banks in Russia provide a vital financial lifeline. As a result, banks increase their fees and commissions, which skyrocket to the moon. Take Raiffeisen Bank International as an example. This is a bank from Austria. In 2021, Russian profits were less than 600 million euros, but last year they increased to an astonishing 1.8 billion euros. This is a threefold rise. However, they also pay a far higher tax to the Kremlin, totaling 464 million euros. Of course, the G7 wants the banks to leave Russia, but Putin is not going to let them. This should come as no surprise. The West stole $300 billion from Moscow, and these banks allow Russian firms to do transactions in Western currency. Raiffeisen Bank, or RBI, is attempting to flee Russia, taking away 1.5 billion euros in profits. However, this is not likely to happen anytime soon. Russia has frozen the bank's shares and barred their sale. The bank is essentially stranded in Russia. Their money and operations simply cannot leave the country, demonstrating how awful G7-Russia relations have become. It's all part of the economic war. Everyone suffers together. So while Putin collaborates with the Chinese to construct a new financial system, EU banks are imprisoned and business continues as usual. Billions of funds are stranded in Russia, but more significantly, the Western financial system remains available to Russian enterprises. This is a significant gap in the G7 financial sanctions. According to the report, the RBI serves 2,600 corporate customers and 4 million local account holders. These are businesses and individuals who can purchase and sell Western currencies. Companies can still accept payments in dollars and euros. People can still use the SWIFT system, but wasn't the West intended to cut Russia off entirely?
We've now sanctioned Russian banks that together hold around $1 trillion in assets. We've cut off Russia's largest bank, a bank that holds more than 1/3 of Russia's banking assets by itself. Cut it off from the U.S. financial system.
This was back in 2022 when West first sanctioned Russia's banking system. Today, it is apparent that Russia still has outlets for international trade. They are aggressively trading with China, using the RMB and rubles to pay their transactions. Around 90% is done outside of the dollar, and Beijing is Russia's largest trading partner. But here's the main question: why doesn't the EU cut Russia off altogether from the banking system? Now, the answer is simple. Europe still needs Russian gas. In May of this year, Russia surpassed the United States as Europe's largest natural gas supplier. Once again, it is a stark rebuttal to all sanctions, and price does matter. We are witnessing the beginning of the collapse of EU industries. Even Volkswagen is on the verge of closing its German operations. That's a historic move, but not in a positive manner. Even now, Europe imports considerable amounts of Russian gas. The majority of Russian gas in Europe is derived from 3 key sources: LNG imports for the Turkstream pipeline and Ukraine transit pipeline. Volumes from these 3 pipelines have not altered significantly. In Q2 of this year, the EU purchased more than 12 billion cubic meters of Russian gas for its economy from just 3 sources. Clearly, Europe must find a way to pay for it. This is a major reason why EU banks continue to operate in Russia. They pay for petrol using Western currencies such as the euro. The US is undoubtedly putting enormous pressure on the banks to close. But if they do, Europe will face significant payment concerns. They'll be compelled to pay in rubles, or God forbid, retaliated Chinese RMB, which will only benefit Moscow or Beijing. So the EU banks are caught in a genuine bind, and even if they wanted to leave, Russia won't let them. Beyond that, there is additional money stranded in Russia. Western revenues amounting to billions of dollars are locked in the country. Approximately $18 billion in earnings might be blocked or paralyzed. Russia has lost its national reserves, and they are furious. They could always react against Western firms on Russian soil. In May of this year, it is expected that approximately 2,000 foreign enterprises remained in Russia. Fewer than 400 people left the nation, and those who did paid a high price. Don't forget that Russia applies a high exit tax. Can this match the G7's $300 billion seizure? Maybe yes, maybe not. However, many corporations will be on the hook in the next months and years. But let me know what you think. Will Russia freeze and seize even more assets? Will the West continue to sanction Russia even though it has been proven ineffective? What will be the next steps for EU considering it has not weaned itself of Russian gas despite all the rhetoric? Thank you for watching. Please share your insights in the comments below. If you found this video useful, please press the like button, subscribe, and click the bell icon to be updated regularly. As usual, remain safe and informed as we live in these difficult times. Thank you for watching Earth Economy Explained.